Hey guys, welcome to Make Money Count. I'm here with Marcus. Marcus, does it smell like Updog in here?
Like smell like what?
Updog?
What's up, dog?
Nothing much, man. It's great to see you. Great to see
That
you.
was really good.
You like that?
Were you holding that one in?
I was. It took me all of my power not to tell you that I was going to do that. Yeah. No.
Are you holding anything else in?
No.
Is
But I'm red in the face, though.
This is a small studio.
Yeah, no, I'm red in the face. That was good. Awesome. Well, thanks for tuning in. Today we're going to be talking about what we think is going to happen with the December rate cut announcement after the CPI numbers came out. We're going to talk about the future of interest rates, which we always do, and talk about the real estate market and all that good stuff. And happy to be here.
Don't tune out. Don't tune out now because of how mundane that sounded. Today's actually going to be pretty interesting.
Yeah.
Because we had a really cool CPI number.
Yep.
Very interesting CPI number that just came out yesterday, which is going to definitely impact the probabilities. At least people think it's going to impact the probabilities of what the rate cut we're going to get in December looks like, whether it's 25 or 50. I'm going to talk about that. What, interestingly, was one of the biggest upside surprises in the CPI number, which is like funny. And then are the liberals actually destroying our economy? Maybe we can talk about that a little bit too at the end.
I like it.
But stick with us. I think it's going to be a fun one today. I mean, it started off fun for sure. Remember, don't subscribe. Don't do it. We don't want you doing anything you don't want to do.
Yeah.
So if you don't want to do it, don't do it. If you want to do it, like begrudgingly, I will say go ahead and like and subscribe. Begrudgingly. I'll also say that we've been getting some awesome comments from people other than Justin's mom. Why does she always talk about how good I look in her comments?
She loves you.
Yeah.
She loves you.
Why don't we get started? Bond yields are higher because of the CPI number. Austin, pull up the bond yields, please. So Government of Canada 5-year bond yield, September. It's gone up for a couple of reasons. It's gone up basically because of how fearful everyone is about the Canadian dollar. The Canadian dollar is just going to take a shit kicking. Like, I don't know what we can do to prevent that from happening. And what you're seeing in the bond market right now is people saying, well, we can't cut rates that much because the Canadian dollar is going to drop further.
Right.
But there is no redeeming quality for the Canadian dollar right now against the U.S. dollar.
Right.
And so as a result, bond yields are increasing. And also the CPI number that we saw yesterday. So yesterday's CPI number from StatsCan came out. And so no real surprise, right? Like everybody was expecting it to come in higher because of the impact that gasoline prices have on the CPI number.
Yeah.
The biggest thing was, the biggest kind of story within it was the shelter costs. And the biggest component of shelter costs that's increasing is property taxes.
Right.
And it's this weird kind of death spiral almost that we're in, right? Where it's like, okay, property values went up, and as a result, property taxes went up, but the property taxes don't go up until a little bit later, and now we're seeing those property tax changes, so people are paying more in property tax, and that is driving up. It's not really driving up shelter costs, because shelter costs are on a downtrend. Pull up my chart from that StatsCan report. And yeah, you can see like there's a really good downward trajectory there. And like you can see that it breaks down the shelter costs into mortgage interest, rent, and then within that shelter component. So if you look at that mortgage interest, that is coming down because of the percentage change from the 12-month period prior.
Right.
So because it went up so much, the month 12 months ago, it doesn't have much more to go up from that previous month. And then the other issue is that Canadians are kind of constantly renewing those mortgages. So more and more Canadians get subjected to higher and higher mortgage rates. And as a result, the effective kind of the cumulative effect is that more money is getting taken out of a Canadian's of Canada's wallet to service debt, to service interest, even though we're in an environment where rates are dropping. The only thing I can say to you here is you got to go variable right now. Like, you can't let somebody at a bank convince you to take a 5-year fixed rate mortgage, because you're not going to get access to some of these rate cuts that are coming. Like, we're going to need to see them. So a lot of economists, everybody is an economist right now. I mean, including yours truly. I don't know. I think it's because you don't really need much of an accreditation to say you're an economist.
No, you can be anything.
You go to school to be an economist.
You can be an esthetician to be an economist. You can.
Yeah. Anyways, but I'll tell you, the conversations I have with people are more informed than ever, I find.
Yeah.
And it's great.
Yeah, like when I'm talking to my clients, I mean, it really just comes down to this. Like right now, generally, depending on what you're looking to do, the spread between variable and fixed is about 80 basis points, approximately. There's no way that we're not going to see 80 basis points come off the prime rate fairly quickly, right? So
I think we're going to still see 50 basis points come off the prime rate in December.
Right, which is going to leave a 30 basis point spread.
Even though, no, because I think that the variable rate spread is going to tighten.
Right, of course.
So I think, like, the one thing I got to tell you is, please, if you're considering making this move, time is not your friend right now. The longer you wait to switch to a variable rate mortgage, the more expensive that variable rate is going to get. We're negotiating them every day, and it's becoming harder and harder to pull people into that prime -1, prime -110, like prime -120.
Yeah.
Like, very difficult, right? So, like, we're working as hard as we can to get people the lowest possible variable rates. But just understand that spread's going to keep tightening. It's going to keep moving away from you. Your penalty is going to only get bigger, and your variable rate discount on the new mortgage you're going to get is only going to get worse. So if you can make that move, or if you're thinking about making that move, now's the time to be making that move. So I think for sure we're going to see 50 basis points regardless of this most recent CPI number. And the reason for that is just like the headwinds that the Canadian economy is fighting, are too significant to overlook because of one CPI number.
Right.
And we've got more data coming out, more data centered around our unemployment numbers, our productivity numbers. We've got these massive things happening in our future, right? Like, immigration will fall significantly. That will reduce demand for not just housing, but everything.
Everything, yeah.
Right. So our productivity will probably increase because of that.
Right.
Because we're going to have fewer people in our labor force.
Doing the same amount of work.
Right. But demand for things will drop. Unemployment will go up. Right. We're in a position right now where we've got like this massive glut of condos that everyone is talking about that needs to get digested through this system.
Yeah.
Well, the number one casualty is going to be employment.
Right.
Because if you have too many condos sitting and not selling, and they can't sell for the price that it costs to build that condo, well, then they're not going to build any more condos.
Right.
And if they're not going to build any more condos, they're not going to hire the people that are required in order to build those condos.
Right. And that leaves just like what we like to talk about, the leading and the lagging. I mean, if they stop building condos now, I mentioned to you before the show, I would love to gobble up as many condos as I can right now. Maybe not like right now, but quite soon, I think. Just because it's an ebb and flow, right? In a few years, there's not going to be a condo. It's going to be impossible to find a condo unit for yourself. Maybe not a few years, maybe a little bit longer than that, but.
So we spoke about this.
Yeah, you and Ben.
Yeah,
I wasn't invited.
Three's a crowd.
I
I missed you though.
You did invite me.
Yeah,
you did invite me.
Yeah, We spoke about this, and we spoke about the fact that it's still more expensive to live in a condo that you own than a condo that you rent.
Right.
And because in the past, investors or homeowners would overlook that because my argument was it's just because they saw capital appreciation. And Ben's argument was more like, no, like you want to own your home. There's a comfort and there's like ancillary benefits that come with owning that piece. That being said, I think that Canadians and the demand side of the condo demand supply equation, the demand side was always kind of okay with losing a little bit of money every month, as opposed to either renting it out or renting it themselves, and would favor owning it because of the capital appreciation that they would see on that condo.
Of course.
And now the investment thesis behind owning that condo is diminishing because
it's pretty much non-existent.
Right. Well, because people are saying, well, I don't see as strong a case for this condo to increase in price. So why would I forego X amount of dollars monthly to live in this unit and own it as opposed to live in this unit and rent it? Or on the investor side case, why do I buy this condo unit and rent it out if I'm going to be at a loss every single month?
Right.
Whereas before they were willing to do it. Now they don't see the capital appreciation side. So do we need to see interest rates drop more, which we're going to see, and condo prices drop more, which it looks like we're going to see?
I mean, nothing's happening right now anyways, right?
Yeah. Well, transactions have picked up.
Well, yeah. But
condo prices haven't fallen.
Exactly.
Right. So if we can maintain this equilibrium, then maybe they don't fall much more. I don't know if we can maintain this equilibrium. Maybe rates dropping helps that. But again, this massive amount of supply, and there's still more kind of supply coming, needs to be digested through the market in order for the market to become healthy again.
Right.
And then there's all these numbers that you look at, right? Like it seems that like freehold homes are flying off the shelves. Condos aren't. So houses, single family residential stuff, increasing in price. I think we're going to see it continue to increase in price. Whereas condos with what appears to be this infinite supply either drops or stays where it is. But then there's a point where people say, geez, why am I moving into a house that I can't afford? I should be moving into a condo. Like there's a gap between per square foot condo price, per square foot home price. At a certain point, home prices elevate. They got to pull the condo price up. So it's how we deal with that. But right now, we're not really thinking about it, right? It's like, you want an analogy? I just thought
I love an analogy.
All right. It's like a squirrel that has a nest and has more nuts in his nest than he's ever had before. And as a result, communicates to the farmer and says, don't plant any more trees.
Right.
Don't need any more trees. We got more than enough acorns in the nest. We're never going to need another acorn. Plenty of acorns.
Yeah.
But eventually, those acorns will be digested. At that point, it will take time for a new tree to produce acorns. And in that interim period, those acorns will be very precious.
I love that. That
was a good one, right?
That was a good one. I really felt it.
Anyways, but what can we do?
Yeah.
To make a consistent supply of acorns so that we don't bunch up too many acorns like we have right now, and we don't end up in a no acorn environment like the one it looks like we're heading into.
Right.
What would you do?
I don't think that's ever going to happen.
No acorns?
No, I don't think that there's going to be a perfect amount of acorns ever. Acorns, not eggcorns. I don't think there's going to be a perfect amount of acorns ever.
Yeah.
Like I think like either we're too excited or too scared, right? Like it's like the pendulum, right? Like you said,
Howard Marks.
Yeah, I don't think there's ever going to be a perfect amount of acorns.
Well, I'll tell you the other
Do you
article.
think?
No. I mean, it's impossible.
It's impossible. Yeah.
Yeah, it's impossible. I mean, the moment that the acorns become precious, we're going to start planting more trees.
Everyone's going to be like, "Oh my god, I need more acorns."
Yeah.
And
I was going to.
yeah.
There was one more thing I was going to tell you.
Was it about the deficit? Were we talking about the deficit? Yeah.
Did you see this?
I did.
So, like, the Trudeau government has blown its own guardrail for the deficit. So they said they were going to spend $40 billion, and the parliamentary budget officer has said, like, we know you're going over.
Mm-hmm.
It's better that you explain to us why and by how much sooner, rather than continuing to obfuscate and wait.
Mm-hmm.
And we're going to find out soon. I mean, fortunately, that spending didn't push inflation up any higher.
Mm-hmm.
And in the article I read, it compares it to the United States, where Canada is like 1.5%. The United States is 6% of nominal GDP. But it's still like almost $50 billion of spending. And we're not really accomplishing anything with it.
Right.
Right? That's the real problem here, is that we've got a spendthrift government that isn't executing on the things that Canadians need. Right? Like, Canadians need affordable housing right now.
Right.
Right? There is no way that we can even produce housing, period, right now.
Mm-hmm.
Because the cost to produce it is simply too high.
Right.
And we've seen recently, so like interest rates are coming down. No one's building.
Mm-hmm.
They're still not building.
Yeah. Nothing's picked up significantly. Yeah.
And part of that is the sheer cost to governments to build. There's two big pieces to it. Number one is the actual price, like the development charges that get levied upon you to try to create a unit of housing, are astronomical.
Mm-hmm.
And the second part is the time it takes to get approved to create more housing is incredible. Like, why should it take 2-3 years for this to happen?
Yeah.
And again, the costs, because of the amount of studies and reports that need to be created in order for you to create those units of housing.
Mm-hmm.
So, and then like the budget, the deficit highlights this massive problem. So if we're going to expect that the governments are going to, like our governments, our provincial, municipal, federal governments are going to take less in order to help create housing, how can they take less? They're addicted to the money.
Right.
Like they cannot do without this money. And now I think they're even in worse shape.
Right.
Because what aren't they getting at the city level? Land transfer tax.
Land transfer tax, yeah.
Nobody's buying anything. Like, you got to understand, like, it's like a drug addicted patient that can't get enough.
Yeah.
And they're hitting their button for like morphine, but there's none left.
Yeah, it's not happening.
And they will do anything they can to get that flow coming, but they can't do it because this regular infusion of capital from land transfer taxes that was just flooding in is gone. So they're going to now say, okay, don't worry about it. We don't need the development charges.
Yeah.
All these programs and policies are all designed on someone else footing the bill.
Right.
So the city's going to say, okay, now they're saying we're not going to charge DCs on affordable. If you have 20% affordable units in the development, then we won't charge development charges and we'll forego property taxes going forward. And then they're looking to the federal government and they're saying, hey, if we do this, you have to give us money to supplement this.
Right.
And then, so that was just lobbed out, right? Like literally this week on the 18th. My eyes suck, by the way.
The 18th was like 2 days ago.
Yeah, my eyes suck. Like literally within the last week, my eyes have gotten worse.
Do you get glasses?
Yeah, I guess so.
Or get that laser that gets shot into your eyeball.
I got that for long distance. Can you get one for short distance?
Oh, I don't know. I'm not an optometrist.
Which brings me to one quick point. Like, optometrists are the most optimistic people in the world. Like, they're totally glass half full people. Because if you can't see far away, they call you nearsighted.
Right.
If you can't see.
Oh, right. They're just like, you're better at this.
Yeah.
Look to the
Great.
positive.
Yeah. Anyways, they released this, the city released this report, and they put these conditions in it that you need to make affordable. And if you do 20% affordable, then you're going to be able to access these benefits, incentives to help you build.
Yeah.
But the numbers still don't work.
Right.
You still can't build.
Right.
So it's like this nothing burger that just gets lobbed out into the world. And everyone is looking at this saying, like, how do we have a housing deficit? Look at all the condos. Problem is those condos cost people $1,500, $1,600, $1,700 a foot. There is no way that they're going to break even on those things.
No way.
There's no way they're going to break even selling them. There's no way they're going to break even renting them, especially not if they're in the condo tsunami that is happening right now.
Yeah.
So I don't know. Do I have a solution? Lower interest rates faster, and maybe some of the supply will get sopped up. On a go-forward basis, separate what you deem to be affordable housing and normal housing, and figure out how you're going to instigate affordable housing to be created. But clearly, the incentives that are being provided now aren't enough because the market's telling you they're not enough. And at a certain point, someone will find an entry point into this market. Different people will have entry points at different times. But we know that condos are holding up because there is a base cost to produce them. And I don't know how much cheaper they can get. Like, what are they? $900 a foot right now?
And no one's looking at them. That's the problem, right? Yeah. Like, $900 a foot is a great deal for a condo in Toronto. But no one's looking at them. Right. No one's getting, you know what I mean? What's that like tipping point is the question.
Again, fool's errand to call the bottom in something.
Right.
We got to be pretty darn close.
Very close.
Don't you think?
Yeah, 100%.
Yeah. Anyways.
Well, I like that. This is a good show.
Yeah.
This is a good show.
Thanks for watching. Thanks for coming.
Don't subscribe.
Yeah. Is that a dick for on your chest?
Huh?
Is that a dick for on your chest there?
What's a dick for?
You don't know what a dick's for?